Spencer, if we were to take the temperature of the markets, it is anything but 75 and sunny. What's the temperature in LA? The market temperature.
It's hot. Yeah, it's hot. We're not gonna let a week, couple days, or a couple months in the stock market damper the enthusiasm for tech here in Los Angeles. It's a really exciting time. This conference this week, it was kind of an unconference because we just sort of announced it to the community just a couple months ago, and now we have over 300 events and 16,000 people, many of whom have come from other areas, including the Bay Area, exploring LA tech, filled with enthusiasm and excitement, and it's a boom time here.
Tech hubs have been changing. Obviously, we've been talking about the movement away from Silicon Valley, but now with more distributed work, more remote work, what is the power of the LA tech hub in particular?
So LA is the intersection of media, entertainment, pop culture, commerce. It's where tastemakers live. So, the 10,000, 20,000 people that decide what's cool for the rest of the country, the rest of the world, they live in LA. This is where culture happens. And now you have this convergence of media through streaming and studios, which really are tech companies increasingly. So the media, entertainment, and pop culture is very strong in tech community here, but it should be remembered that LA also has a 50-year manufacturing history in aerospace, in heavy equipment manufacturing, technology, incredible universities, and it has now cemented itself as the #2 tech hub behind the Bay Area. Our goal, my goal, the LA tech community's goal, Emily, is to get you someday to move your show from the Bay Area to here in LA and have the intro of your show talk about how LA is the tech center of the country and hopefully the world.
It's a wonderful idea, Spencer, and I can't say we haven't thought about it. So you will be my first phone call when that happens. But look, it's dreary. There's a lot of red on the screen when you look at the markets almost every day. How is this impacting your strategy? Yeah.
So look, we are in the midst of a venture winter. There's no doubt. So venture firms have pulled back. Late-stage growth investors, the hedge funds, the crossover investors that were leading all of these high-priced Series D, Series E, Series F rounds, they've moved out of privates. They're either hiding under their desk or they're focused on the public markets right now. So that chill has moved upstream to the earlier stage companies, and companies are adjusting. Companies are doing inside rounds, they're doing flat rounds, they're cutting back on marketing expense, they're cutting headcount, and they're adjusting for this new winter. And I'm old enough now to have been through several cycles, 2008, 2001. Great companies can get created during these down cycles. They just have to make sure that they survive. And customer behavior changes, corporation behavior changes during these period of change and during recession. So a lot of great companies, a lot of great things come out of them, but you're absolutely seeing companies adjust and venture capital investors adjust.
Now, I know Andreessen Horowitz has a big presence down there, and they are the target of a lot of chatter in Silicon Valley right now. Mark Andreessen writing the firm's biggest check ever to Adam Neumann, the founder of WeWork. Some people pretty unhappy about this, and we spoke to a young founder, Allison Byers, yesterday, and I want you to take a listen to what she had to say.
You have to feel that rage when you are part of that community that is just historically blocked from accessing this funding.
Spencer, I'm just going to leave it open-ended. What's your take?
Yeah. Well, there's a lot of commentary and discussion this week at LA Tech Week about this exact topic. My take is I was very surprised by the size of the check. I mean, $350 million for a seed round, that's ginormous by any standards. I don't know Adam Neumann. I suspect that the team at Andreessen Horowitz had a hard look in the eye with him and said, have you been humbled? Are you now coachable? Did you learn from the mistakes that you made? And they looked past those mistakes and said, here is somebody who has revolutionized a huge category, commercial real estate, and who has created a very large, successful, publicly traded company, which was a roller coaster. It went up, it went down, but you know what? It's still a $5 to $10 billion public company today. And I suspect that he convinced Andreessen Horowitz that he learned from his excesses and from his mistakes. Now, the commentary from that founder is absolutely right. It speaks to the fact that there is still a lack of diversity, equity, and inclusion. I mean, Emily, you literally wrote the book on this, right? And this is still a serious issue in tech. And And so she's right to express outrage from her perspective about it. But I think that's what Andreessen Horowitz is thinking when they decided to back Adam Neumann again, which is that he'll have learned from his mistakes and and be a different type of founder and a different type of leader this second time.
You know, it does speak to a pattern, as you say, that we have seen in Silicon Valley time and again. I'm curious what you think of his idea as someone who also founded a company in real estate. Is his idea, Flow, this idea to revolutionize residential real estate, apartments, does it
I
seem
think it's a pretty
that
clever
visionary
idea,
to you?
Emily. Yeah, I think it's interesting. I mean, for viewers that don't know, he's trying to create a branded multifamily product. So think like what W Hotels is to hospitality, this company, Flow, could be to apartments. And it is a good insight that most apartment buildings are unbranded. They're just named the address. And it is kind of an uninteresting experience. You just take the elevator up to your little box and that's that. So he's trying to create, WeWork for apartment living. I think that's a good idea. What I don't know is if the margins of managing a multifamily apartment building can support the accoutrements that he needs to build to create that community. I was talking to an investor last night who's much more experienced in multifamily real estate investing than I am. And this person was very bearish on the idea, said it'll never work. There's not enough margin in managing multifamily apartment buildings to create what he's trying to build, both the brand and also other advantages to the tenants. And so this investor was very negative on it. I haven't, I'm not close enough to have a personal opinion about it. But as a user, as a tenant, as a homeowner, I would agree that there does seem to be there. I think it is solving a problem that renters have.
Well, you and I could go on and on about this for hours, but we can do that offline, Spencer. I do want to get your take on the market dynamics, the housing market dynamics. Sure. Do you think that the downturn that we're going through will delay innovation in the housing industry? The hope, which is what you were trying to do with Zillow, is make transactions easier for home buyers. And will all of this tumult put that off?
Potentially, because what's happening is the downturn in housing is scaring venture capital investors from putting money to work in the category. So, 75 and Sunny, my venture firm, has about 100 investments, about a quarter of which are in proptech. And so I'm a very active proptech investor, and I can tell you that VCs are really put off and scared because the public comps have come down so much. I mean, Zillow is at a 7, 8, 9 year low, and all the other public comps have come down so much, and that weighs on investor mindset and sentiment. So yes, it could dampen innovation because there will be fewer startups in proptech getting funded. Now the good news is, if you are a proptech like Picasso, one of my other companies that is funded, that has raised a lot of venture capital, that already has a product in the market, this is a great time to gobble up market share because competitors probably won't be able to get funded. So, again, like I've seen in other cycles, in 2008, for example, where Zillow actually benefited from the 2008 recession because they were already funded and on the racetrack and others couldn't get funding, great companies can be built during this down cycle.
Last quick question about SPACs. You were part of the SPAC Gold Rush, Chamath Palihapitiya as well. Your SPAC OfferPad, I don't think it's probably not where you want it to be, and we've seen a number of SPAC cancellations. Was this whole SPAC thing just too good to be true, or does it reemerge in a better market?
So I did 2 SPACs, one merged with Rigetti Computing and one merged with OfferPad. And you're right, neither of them are trading where I would like them to trade. One's at 5 and one's at 2. So there's a long way to go for those companies to live up to their full potential. The SPAC craze is over. I think that investor sentiment has soured on the product. And I still think there's a place for that product, and in particular, if a private company wants to get public right now, a SPAC merger is really the only way to do it because the regular IPO process is totally shut right now. So there is still a role for SPACs, but it's a much smaller role than there was a couple years ago when the advantages of the SPAC path were more clear relative to a traditional IPO.